Welcome to this explainer. Okay, I want you to imagine, just for a second, that you are running one of the absolutely most powerful companies in America. We are talking millions of fiercely loyal customers, thousands of bustling stores, and billions, with a B, in annual revenue. You're the undisputed king of your industry, period. Then, one random day, a tiny struggling startup knocks on your door and offers to just sell itself to you. What happens next? Well, it's a crazy, cautionary tale of how one of America's most powerful companies lost absolutely everything.
50 million bucks. Now, to you and me, that's life-changing money for sure. But for a corporate empire pulling in billions, it's basically pocket change. Back in the year 2000, that tiny startup we just talked about, a little company going by the name Netflix, offered to hand over their entire business to BlockBuster for exactly this amount. Today, knowing what Netflix turned into, 50 million sounds like the absolute bargain of the century, doesn't it?
So, put yourself in that boardroom. What do? Take the deal? Politely say no thanks? Well, the records show BlockBuster executives rejected this deal and literally laughed at the Netflix founders. No joke, they laughed. They sent them packing, convinced this little DVD by mail service was nothing but a fad. And by doing so, they locked in what would become one of the single most expensive mistakes in the entire history of business.
Section 1. The King of Video, a Weekend Tradition. To really wrap our heads around the sheer scale of this colossal mistake, we've got to rewind to the 80s and 90s.
You know, what's really fascinating here is that BlockBuster wasn't born a dinosaur. Founded by David Cook back in 1985, they were actually the disruptors. They looked at the cramped, super disorganized mom-and-pop video stores of the time and just completely flipped the model. They built these massive, brightly lit stores, brought in incredible organization, and rolled out a cutting-edge computerized inventory system. Customers ate it up. They weren't lagging behind. They were bleeding-edge innovation at the time.
By the late 90s, they were untouchable. We're talking over 9,000 stores worldwide, more than 60 million loyal customers, billions in revenue. If you wanted to watch a movie on a Friday night, BlockBuster was the destination. Wall Street loved them, the brand was bulletproof, and their competitors were eating their dust. They were synonymous with home entertainment. Actually, scratch that. They literally were home entertainment. Section 2. The late fee trap. The weakness hidden in success. Because underneath all those billions, there was a glaring flaw that created the perfect opening for a challenger.
Here's the wild part. BlockBuster was raking in hundreds of millions of dollars every single year by basically punishing their own customers. Think about that business model for a second. If you forgot to return a movie, you paid extra. If it slid under the passenger seat of your car for a week, you paid even more. It was crazy lucrative for the company, but ironically, it was their absolute Achilles heel. Customers deeply resented feeling penalized.
Management knew this. They knew full well that customers absolutely hated late fees, but they couldn't imagine operating without that sweet, sweet revenue. They were completely addicted to the cash. And this stubborn reliance on a practice that actively annoyed their users is exactly what paved the way for Netflix. It handed Netflix the perfect pitch on a silver platter, a service with absolutely zero late fees.
Section 3. The $50 million mistake. The year 2000 meeting. All right, let's fast forward back to that fateful meeting where the tide really started to turn.
So Netflix was actually hurting pretty bad from the dot-com crash, which is exactly why they brought that buyout proposal to BlockBuster in the first place. And the contrast in how these two companies viewed the world is just staggering. BlockBuster couldn't fathom why a physical retail giant would ever buy some rinky-dink DVD by mail operation. They were stuck playing defense, desperately protecting their past success and their massive real estate footprint. Meanwhile, Netflix had their eyes locked on the horizon. Their whole mindset was about building the future and delivering convenience directly to people's living rooms.
Section 4. The streaming revolution. Evolving customer convenience. So after getting laughed out of the room, Netflix didn't just give up and go home. Just look at this progression of convenience. Step 1, the classic BlockBuster model. Getting in your car, driving to the store, hoping your movie is in stock, waiting in line. Step 2, the early Netflix model. Unlimited DVD rentals delivered right to your mailbox, zero late fees. But step 3, that was the ultimate game changer. Instant online streaming. Instead of waiting for the mailman, you just click a button and watch instantly. Netflix boldly embraced this new internet era. BlockBuster, they completely dug their heels in, clinging to plastic discs and brick-and-mortar stores.
Section 5. The Final Collapse. Catching up is harder than leading.
Eventually, the executives at BlockBuster woke up and smelled the coffee.
But spoiler alert, they were way too late. Tracing this timeline is just wild. In 2000, they laugh at the buyout. Sure, they eventually tried launching their own mail and streaming services later on, but they were no longer dealing from a position of strength. They were playing catch-up against a rival with years of tech development and a massive subscriber base. Then, the 2008 financial crisis hits, completely wrecking consumer spending on expensive physical rentals. Debt piles up, stores shut down. By 2010, a mere decade after laughing at Netflix, BlockBuster filed for bankruptcy. Goliath had officially hit the floor.
1. That's it. Out of the 9,000+ bright blue and yellow locations that used to be literally everywhere, this is the exact number of BlockBuster stores that remain open today. Just one single store. It stands there like a solitary monument to what happens when a wildly successful company stops innovating and, more importantly, stops listening to its customers. So what's the big takeaway from this explainer? Well, first, never get too comfortable with your own success. Second, always listen to changing customer behavior. If they hate late fees, figure out a way to kill the late fees. Third, understand that new technology will utterly destroy even the strongest businesses if they choose to ignore it. And finally, protecting the past will absolutely prevent you from building the future. Sometimes the biggest threat isn't the competition. It's just a stubborn refusal to change. Netflix had a fraction of the resources, but a massively bigger vision. And vision beats size. Survival belongs to those who adapt.
I'm going to leave you with this thought to chew on. Look around at today's rapidly shifting market. What modern industry giant, maybe an app you use every single day, or a store you see on every corner, might be the next BlockBuster? Because as we've just seen, nobody is too big to fail, no startup is too small to win, and today's undisputed king of the hill can very easily become tomorrow's cautionary tale. Thanks so much for joining me for this explainer, and keep your eyes open for that next big shift. Catch you next time.